Vijay, coming to you first. The first question again would be, and let's start first with the base metals here. Again, that has been really red hot here. Now, what is happening in the base metals? Primarily, again, one could say that yes, there was spike in aluminium, nickel, and broadly other base metals. They followed the course here. But now, how are the entire base metal pack looking to you? Given there has been some small strength in the dollar also, but what is the fundamental, the entire setup looking to you?
Thank you, Piyush. Thank you for having me on your show. Piyush, the last time I was here on your channel was 9th of April, and I had said base metals are likely to see buying momentum coming in at lower levels, especially nickel, which has seen approximately over 200% of a 200 rupees spike from where we were on 9th April if you calculate the intraday highs of yesterday. Aluminium, similarly, thanks to the sanctions on Rusal, have seen a jump up from 128 odd levels to almost 178. That's a good salutary 50 rupee move in that time frame. I think in my memory that I have been trading these hard asset markets, a two standard deviation move. Now, quant traders or traders who trade with mechanical trading systems would vouch by the standard deviation method. You've seen over two standard deviation moves in aluminium, in nickel, and somewhat of a muted up move even in copper. But wherever two standard deviation moves have come in, I would say thank Mr. Market if you're on the right side of the market, that is long. Take profits off the table and be kind to yourself and spend the money well.
Right, so that's the word coming here. So that's what Vijay is saying, that perhaps it's good time to book profits here. But then Vijay, want to ask one follow-up here. If suppose you were not in aluminium, if you were actually either basically long in copper or zinc here, would you be actually holding a similar opinion? Is it a uniform opinion across the board here? Or perhaps you would say that after some days, maybe again, or maybe next week again, the focus will come back to the inventories, the individual sort of fundamentals there?
Piyush, I would say one needs to take a case-by-case approach on each metal. Lead, zinc, and copper haven't really moved as much as aluminium and nickel have. So two standard deviation moves have come in nickel and aluminium, not the others. Coming to your question, if I had zero positions in the market, what would I think? I would think that aluminium is overdone. It's the second most commonly found metal after iron. And it's not that 9% contribution from Rusal is going to be entirely taken off the market at all. CIS countries, the Chinese, etc., will continue to buy from Rusal if these guys were to drop their prices to below market levels. Aluminium is not going into short supply. There is no shortage of aluminium in the world. So given yesterday's intraday peaks in the coming week, would I be tempted to kind of anticipate some short activity? Yes, definitely.
Right, Vijay, same question. I think this question I think would be in the minds of traders here. They would have seen the prices. It was a very sharp spike. I think everybody was surprised here. And now again, when the prices started cool off, the first question comes, looking at the screen, is that where it can go. If the correction is happening, if again the profit booking is happening here, and again, as you were just pointing out, that perhaps the rally is overdone. Now, what are the levels again where you think perhaps the market is going to get comfortable, both for aluminium and nickel here?
Well, Piyush, from a behavioral finance point of view, take a look at what really happened. The factor that you pointed out, and it's very, very accurate and very sharp of you to have noticed it, surprise. Surprise would mean that there were a lot of traders who've gone short on these metals. They are nursing losses. And in case the markets are to come down, these guys are waiting in the wings to kind of square up their positions. So downsides will get a cushion from short sellers who are stuck with losing propositions and who are waiting either to get out at very tolerable losses or at break-even points. So in the coming week, wherever you saw the prices spike suddenly in the last week, those will now become the support areas for both nickel and aluminium. And to a certain degree, there would be caution even on the other industrial metal counters like copper, which will see a huge amount of resistance the closer it gets to 470, 475 also. So my guess is next week is likely to be of quieter consolidation as compared to the previous week, which has been of absolute aggression and optimism.
Right, so consolidation should be expected. But Vijay, again, if possible for you, any levels in nickel and aluminum which we should be watching out for, if those could be actually the important support levels there?
I think close to 900 or below, slightly below 900 would be a sort of a very, very strong support for nickel. And where aluminium is concerned, I think 150, 155 odd levels will see the bears coming out and extinguishing their shorts, which are now bleeding them with mark-to-market losses.
The next question would be that what basically we should be expecting from the oil prices. The trajectory has been positive. In fact, the hedge fund data, the recent data was pointing out on the Brent again, there was not much trimming of the long positions there. The hedge fund managers largely again were holding on to longs. A week before, there was trimming of long positions in WTI, but now again, it seems perhaps the long positions are getting more conviction here. Vijay, coming to you, what's the trade right now on oil prices? Given we are at 74, firmly above $70 here, and the last time I was speaking to you, you were sounding bullish on oil prices here. Some reports in the market at Saudi officials, they want the oil prices to be between $80 and $100. There is an impending rail strike with the market expecting in Canada. There are a lot of levers here. So what's your assessment of the oil prices here?
Piyush, I remain bullish on oil since at least 6 to 7 months, if not longer. And I've laid forward my hypothesis of the Saudi Aramco IPO being the biggest trigger for making crude oil prices even more buoyant than they already are. So I've also said oil prices where you see at where you see the daily and weekly charts, it's a case of 2 steps up and 1 step down. So you're likely to see a $2 or $2.50 rally with interspersed with a decline of maybe $1, $1.50. That trajectory remains in place, and you're likely to see week-on-week gains interspersed with some mini corrections which would lure in short sellers to get a little more aggressive, lose their shirts, lick their wounds, and come back again at higher levels. So this procedure is likely to continue. Where the levels will go, that will frankly depend on A, crude oil prices in the international market, B, the currency factor. Now the USD INR is frankly worrying me because there's an inverse head and shoulder breakout on the USD INR, and even if oil prices were not to rise in the overseas market, the fact that the rupee is weakening against the dollar would mean that we are now importing inflation into the country.
Vijay, I want to ask you one factor, and this one factor is slightly outside of the fundamentals of oil here, but the question is on oil only. Is that dollar again? Now, we actually have seen a sharp sort of decline in the pound that actually pushed the dollar index higher. Usually, the decade long, or I should say many, many years long, the correlation is that if the dollar again basically is strong, that basically is correlated with the oil price movement also here. So what's your take on the dollar here? And number two, at present, looking at what the Saudis want, how the market is behaving here, how much should we really give importance to the dollar trend here?
I think the dollar and the Saudi aim of pushing oil prices higher will go hand in hand. You might not really see the kind of correlation that you earlier used to witness. It's like a seesaw. If the dollar went up, crude oil prices went down, and vice versa. That correlation largely will remain in place, but let's not forget, after the Yom Kippur War in the 1970s, for the first time, the US has now turned into a net exporter. So the US will also want and clamor for higher crude oil prices because they are depending on export revenues. So in spite of the dollar gaining strength, if the dollar index was to gain strength, my guess is the rally in crude oil prices is largely likely to remain intact.
Vijay, coming to you, let me first actually ask the question silver here. Purely looking at the screen here in terms of hedge fund positions here, there are very heavy shorts in silver here. One thing I want to ask you why that was the case here, because gold silver ratio actually was favorable for silver here, and the result actually we saw there was a short squeeze, silver prices suddenly started spiking up here. So what's the trend on silver, and why actually hedge funds they actually were going short on silver?
Well, Piyush, hedge funds are pure alpha boys, and they basically take very short-term directional calls. And unfortunately for them, in the recent past, their call seems to have caught them on the wrong foot. So why would they want to go short? It's because they want to earn alpha irrespective of the market trend. So sometimes they make, sometimes they lose. And this time, unfortunately, they lost. Where silver trend is concerned, I think I've been saying it since the Muhurat session of 2017, and I stick my neck out and I would reinforce my view that prices of silver are likely to be higher, both in terms of benchmarking at Diwali 2017, as well as benchmarking it at the level where they are on 20th April 2018. I would say silver is likely to outperform gold in terms of percentage returns on your investment. Take a look at the amount of silver required for making photovoltaic cells from the solar power industry itself, and you get a bearing of what's likely to occur. More short squeezes, more rallies ahead.
Right. So one question, Vijay, again, if somebody actually wants to go long in gold and silver either, what you are trying to suggest and what I'm trying to understand here is, or I'm trying to decipher what you were saying is it actually much better to stay long in silver compared to gold here? Because gold has been sideways, but gold-silver ratio, is it actually far more favorable for silver here?
Well, the answer is yes and no, and that's the dichotomy of the Indian market. Unfortunately, if you want to take delivery of gold, you have ETFs. And you don't pay cost of carry when you take delivery in ETF. Unfortunately, silver does not have any ETFs whatsoever. More volatile, higher cost of carry. Looking at a bank interest rate regime of 6.5%, 7% on my FDs, if I'm going to pay 18 and 19 and 20% cost of carry annualized on rolling over my long positions in silver, it's actually a losing proposition to buy and hold in futures. So if at all you're looking at alpha, and you probably should be looking at deliveries in silver and ETFs in gold.